All right, we are live here. Welcome. Looks like we just have a few folks to start out, but we're going to ramp up here in a bit. And then we're going to actually, some of you are watching this as a replay. So very excited that you're here. For those that I haven't met, I am Bronson Hill, and I work with Bronson Equity. We have about 60 million in real estate. And basically our focus is really helping you become financially free through passive investing in real estate. So my background really is working in the medical field, working with a lot of medical professionals that work a lot of hours and make a lot of money, but they really don't have financial freedom because their time is, really determines how much they're getting paid. And so that's really our focus is really trying to find ways to increase the amount that you're making, increase this whole bucket we call passive income. So I'm really excited tonight to be here with Damion Lupo. Welcome, Damion. Really excited to have you tonight.
Good to see you, Bronson. Thanks for having me.
Awesome. Yeah, I know we've known each other a while, and I'm just really excited to have you share tonight. You've got just an awesome topic to talk about with retirement and the QRP and really unlocking things for a lot of people that they didn't even know they actually could do when it comes to investing using their retirement funds to get into real estate. So I know you're really going to get into all that. We've got a few folks on here so far. Would you just drop in the chat box if you just tuned in here? Just maybe drop where you're connecting from, just so we can kind of have a little interaction here, and we are going to have some Q&A at the end as well. So we want to make this pretty interactive. I've got a couple polls and stuff to kind of get some information from you. So if you just want to drop in there, don't be shy, just start chatting. Then we can kind of know where people are coming from. But as we introduce this topic, and the reason I really thought this was important is because there's some major issues with investing through retirement accounts. And again, Damien's going to get into this, but a lot of times what will happen is there's something that, when somebody says, oh, I can't do this. And a lot of times we get stuck there, right? Oh, you can't do this. You can't use your retirement funds to invest in actual real estate. You've got to only invest in REITs or other things like that. And really the question a lot of times what I've discovered is not I can't do this, is how can I do this? So really asking the question how and trying to find another way to do it. And that's the awesome thing about financial education, because really if you educate yourself, you want to earn more, you just got to learn more. You got to learn other ways to do it. You got to learn other doors to be able to open up. And so Damien's one of the most creative thinkers that I've seen when it comes not only to this particular product and really approaching your retirement, but just when it comes to investing in general. So we're going to get into that in a minute, and I'm going to give him a quick introduction here. We want you to stick around at the end. There is a free gift that will be offered, a couple kind of resources we wanted to offer you for free for being on here. So appreciate you being on, but thanks for taking the time. So I'm going to put up a poll here real quick, and then I'm going to give an introduction. Looks like we got some chat here. Looks like we got John. Welcome, John. I'm not sure where you're from, where you're coming in from, but I know we've had a conversation, so maybe you can go ahead and just let us know where you're at, John. So I'm going to put this poll out just so we can kind of get to know who's here. I'm going to do this one. This one is just, what is your profession? What best describes you? So you can go ahead and fill that out. And as you do that, it will, again, just kind of figure out who we have here in the room so we can kind of tailor some of this to you. So, okay. So for Damion, like I mentioned, he is an entrepreneur. He is the CEO of Total Control Financial. His mission is to free 1 million people from financial bondage. He's also a 5th degree black belt. He's created the Black Belt Wealth Academy, which is awesome. So you can do some chops to your finances and change things, as well as I love that you kind of brought it both sides. And then also he's the creator of the QRP, which is kind of what we're going to talk about today. We're going to get more in depth into that, and that's what's really, really exciting. So I'm going to have you take it over here in a second, Damion. Just want to go over this poll real quick. It looks like we have mostly professionals, a few professionals, CPAs, business people. If you haven't answered the poll, go ahead and answer that, and business owners. So welcome to each of you. Glad that you're here. We're going to do some more polls in a little bit. So Damion, welcome. Why don't you take it away, and I will get your presentation going. And then unless you want to just maybe you talk for a little bit and then do presentation. I'm not sure if that's how you want to go about it.
Yeah, I mean, I think the presentation pretty well introduces me, but I'll add on to what you just said. And really my background is being a professional real estate investor for more than 2 decades. So I started in the 90s. And when I say the 90s, it was barely, I did it by one day. It was New Year's Eve, 1999, when I bought my first property. I'll go through some of that story. So I've been doing real estate investing for a long time, and it evolved into a number of things. I've launched more than 50 companies and owned them. Some were really amazingly successful, and some crashed and burned. So anytime you hear a big number about somebody, if they say, "Oh yeah, it's all been good," they're lying to you, because nothing works like that. It's always about learning as you go through. So I'm no different. I wrote a book about it called Unicornomics, that if you want to understand what it's like to launch companies and have an 85% likelihood of success, that may be a resource that you want. If you want to copy that, I'm happy to send it to you. But that's at the background. Serial entrepreneur, and things ranging from startups that basically blew up in a matter of months to things that turned into multiple eight figures in revenue. And so that's the background. And then I'm going to talk about what the main focus is, because one of the things you'll hear me talk about in my podcast on Financial Underdogs, which is why you see FU on my hat, is that if you chase a bunch of things at once, it's like if you've ever seen an animal in the wild trying to chase a bunch of things at once, they end up really hungry because they don't catch anything. It's the same thing with investing or business. You've got to focus, whatever that focus is. So my focus is on the retirement space. It's on the EQRP that I created a number of years ago, and we're going to talk about it. Bronson was kind enough to be a guinea pig, and understands this because he uses it, and he can share his experience if he wants, and I'll go through a presentation. Anything you want to share before I jump on the presentation?
Yeah. So one thing you said, I mean, I can get in, you're going to get into the specifics of what the QRP is, but it's really something that I think if anybody has over $50,000 in a retirement account, they should get into this if they want to invest in real estate, because it just avoids a lot of them. And you can be paying tens of thousands of dollars in taxes that the government kind of sneaks in there and gets, and I've raised over $15 million. This was the type of account that we always recommended people get, because they were able to have a lot of flexibility, really have that checkbook control. So we'll get into that in a second. But one thing you said, and then we're going to start the presentation, is just the idea of, it's never perfect, right? Real estate investing, life is never perfect, but if we learn from it, and nothing really is wasted. And so I love that you shared that. I love that a lot of times, in my opinion, it's our ability to be willing to try something different and really being able to even make mistakes in business or in other ways and learn from those that really makes us really the most successful. So, appreciate you sharing that. I'm going to go ahead and start this presentation, and then I think you should have control there. Do you see the next button there, Damion?
I do.
Okay, cool.
So just everybody knows, this is the first time I've seen this platform, and I already like it better than Zoom. So it's pretty cool. So Bronson, good job for picking the right platform. I think that says something about your thinking through. I think most people do a default, and that's, most people have a default life, and you're obviously looking to something better, something that is more efficient, and that would say a lot about how you look at investing. You're not just grabbing anything, which is what a lot of people are doing right now in the investing market space. If something's for sale, they buy it. And I know that's not what you're doing. You're looking for great deals that are actually going to be successful, not just something that you can get and show it as a trophy that you purchased something this month. So anyways, good job on the process of getting the best platform up and running for everybody.
Awesome. Well, I'm looking forward to seeing what you have to share. Thanks, Damion.
All right. So you guys can see that there's two things on here. There's the QRP book, which is the book that I originally wrote 10 years ago. And this year in 2021, it's the 10th anniversary edition, updated information, updated case studies, updated numbers from the IRS. It really gives you the insight into the qualified retirement space and something unique that we do. And then the other thing is, if you want more, because you happen to be entertained by what I share, my stories, if you want more, FU is the place to go. It's a podcast that I do every day, Monday through Friday. And so that's where I live, if y'all want to come hang out. What I think is important for everybody to remember is that information is interesting and you can learn a lot, but if you don't do anything with it, if you don't pull a trigger, it doesn't really matter. In fact, a lot of people that have PhDs have tons of information, dissertations, and they really never pulled the trigger on doing things. I mean, not all of them, but many of them. And ultimately what you have somebody that ends up being poor, helpless, and desperate. And with a PhD, that's kind of sad. Their alternative has nothing to do with education. It has to do with pulling the trigger. Launching 50 companies, that's a lot of trigger pulling. So, it's kind of like being a Navy SEAL. You pull a lot of triggers. The 30 seconds is how long it takes to make a decision. If you don't learn how to make decisions in 30 seconds, you're going to watch your life go by, because Bronson, you totally agree that everything is speeding up. It's not slowing down. It's accelerating, and the acceleration is accelerating. So right now, more than ever, if you can't adapt, you're dead. So the question is, how do you practice? How do you become somebody that pulls the trigger? It's by practicing doing something. We're going to give you a chance to do something and get that muscle going at the end of the presentation. This is something that matters both in money and it matters in life. One of the experiences I had back about 3 years ago was a friend of mine calling me right about this time of the year, the beginning of the year. And he said, hey, I'm taking a trip. I'd been to Asia with him. And he said, I'm going to the gorillas in Uganda, silverbacks. Do you want to go? And I said, yes. It took about 12 seconds. So not 30 seconds. I was trained. I practiced this muscle. And about 6-7 months later, this was me with a family of silverback gorillas in Uganda. This one had just pushed through us. So we were standing there. It walked up, literally knocked us to the side, and then shook this tree and scared the crap out of everybody. But the funniest part, they were the gentlest things you've ever seen. And when you're right in front of them 18 inches away and you're like that, it changes you. And this is what happens when you make decisions. You pull the trigger. The thing that we tend to be afraid of is that if we pull the trigger, we're going to make a mistake. We're trained from birth, literally in our system, that if you make a mistake, you're a failure. If you make 50% mistakes, you get kicked out and you're ostracized and pushed into the wild. And what's funny is that if you make 50% mistakes in the real world, like in real life, and you make half right, you're a billionaire. So we're taught the exact opposite of what it takes to be successful. And part of the training comes from this idea that if you make a mistake, something's going to eat you. Because in the bush, like you literally get eaten. Like in Africa, if you're in the wrong place and you go off into the wild and you do something stupid, different trip to Africa. I had some people that the week before me went out to try to organize the cubs, the lion cubs, because they weren't in the right frame for the picture. And mama came over and killed the lady doing it. So you can be eaten by mistakes, but unless you're in Africa or like you're in Alaska where I grew up, and my last job, I actually had to dodge polar bears because they would eat you. If you're not in Alaska or Africa, mistakes aren't going to eat you. They're just going to teach you. So that actually sounds, I never said that before, but they do teach you. So the idea is go out and make mistakes, learn, pull the trigger. And this is one of the things that I did, pull the trigger, and it changed my life. This is generally why we don't pull the trigger, because it creates bad tattoos. Like, you go out and you don't do something. That's literally the worst possible scenario, because you're going to end up with a life. And I'm going to share a story about the worst experience of regret that I've ever had in my life. And, I'm in my 40s, so I'm not at the end of my life. But a few years ago, I flew up to Alaska and met with my dad after he told me he had stage 4 cancer. And he said, there were so many things that I wanted to do. You want to talk about a tattoo that gets burned into your soul? Have your parent tell you that, or tell somebody that. I'm at the last end of my life, and this is what I got. I got regrets. So that the idea here is to help you understand that there's an option, there's a choice. And I'm going to get into some of the ways that you can make sure that you never have that tattoo, because ultimately it'll be seared into your soul and on your heart, and it'll never go away. So here's what I think. I think that if we don't go deep, 10,000 is that number of hours that Malcolm Gladwell made famous. If we don't spend time going deep into something, then we're never going to develop what we need, which is mastery. Bronson has done this in real estate. He's spent that time. He spent those hours. He's invested in them. So when you're talking with Bronson about real estate, it's not because he went to a seminar last weekend and he's regurgitating something he learned. It's what he does. It's what he lives. And so with anything in finance, if you're going to choose to do something, the idea is go deep. If you don't go deep, you're going to have the regrets, because that's where the fulfillment is. That's where the idea of not just success, but really building options. You're not going to find somebody that has millions and millions of dollars or financial freedom that hasn't gone deep. You don't start off by diversifying. That's one of the stupidest things I've ever heard, is people saying, well, I'm going to put $5,000 in 50 different things right now. I go, great. You're going to learn nothing about anything, and you're not going to go anywhere. You're going to look like a mutual fund. So ideally, you pick what you want to focus on that you actually care about, and you go deep into it. I've done that with several things. 3 things. First one was martial arts. I did this at the same time I was doing real estate. So like Bronson said, I've got 4 different black belts. One's a 5th degree black belt. This was a super fun experience where I was demonstrating, having a good time, until 3 hours into it, I threw that guy up in the air and threw him into my face and broke my cheek. So I learned, don't do that. Like, that's a very bad idea. You get to go to the ER, but you learn. And I mean, it was kind of funny because after we were done, I was sitting there talking with everybody, and I had this dent in my face, and people were looking at me like I was going to die or something, and I didn't even feel it. So his foot went into my face, and we all learned together. And then I got to go to the ER on my birthday. So super fun. Nobody died. Nobody got eaten. Just another experience as part of the journey. The second one was the real estate, way more than 10,000 hours. And this is what I developed. I developed a real estate portfolio. So I'm sharing this with you to really impress upon the fact that I understand real estate. I understand when I say Bronson knows what he's doing, I actually have done it. So I'm not just endorsing somebody out of the blue. He's actually out there doing it. And that's a big deal. You do not want to invest with or even learn from people that aren't doing real estate because it's theory. You might as well go to Harvard and listen to some Yahoo that just studied it and has an MBA. It's not really where you're going to learn how to make money or become financially free. It's people like Bronson. This is what my portfolio looked like. And I was a very successful portfolio. And I say that very specifically. My life was my portfolio. So $5 million net worth went from this, 150 houses, plus Will Smith's car. This is a nice Ferrari from Bad Boys 2 that I thought was a good idea. Really good idea. It took me 1 week to get arrested on Christmas Eve. Awesome. and I was having a good time. Way too much money, way too early, and great experience. And I learned what happens when your ego takes over, and it's called financial Armageddon. So Ferrari went away. The money went away. It went from that portfolio, that $5 million net worth, to negative $5 million in 12 months. So that was a $25 million swing in assets, 20 million of assets to negative 5. So like no assets and owing 5 million, not fun. And that was because my ego took over and I wasn't grounded in anything other than my own hedonistic tendencies. People often will hear me say that I was a big douche because all I was focusing on was the money. And that's a big problem. If you're not focusing on something more than money, you're going to end up with an event called the demise of your life. That shifted on the other side. So after 2008, I spent a couple of years in denial, which is not a river. It's literally a place of being an idiot where you're just saying, it wasn't me. It's like a Shaggy song, wasn't me. And I finally said, wait a second, maybe this was me. So I went and got help. And part of that help for a couple of years was asking better questions, which is always a good idea. If you ever want to figure out what do I do? Ask one question. It's the one question that was asked of me by my coach, therapist, and sensei, which is what is true. And when you ask the question, you get down to a place where you realize it's not that I want to make more money. It's that I want to own my life, that freedom actually matters. There's nobody I've ever met that will tell me that I don't want to be free. I want to be in jail. Everybody wants, but we are in jail. Like we're enslaved by money. So what I do, and I'm going to share like the process I do in general with the retirement stuff. I'm a financial emancipator. And if I put that on Twitter, they would deplatform the crap out of me because it's probably racist. But the reality is money is modern day slavery. And there's different rules. And if we know the rules, then we can break the shackles. My different why after this meltdown, what I realized was I'm here to teach based on my experience, and I'm teaching people how to break their shackles. So the idea is 1 million people's shackles broken means that we can actually change the world, shift the energy of being victims and go into a space where there's a brighter future than the past. That's what I do. And that's what this is all about. If anything should be something you fear, it's the IRS. And it's not because the IRS is going to come knock on your door. If you have a team, you don't really worry about it, meaning you have a great tax person, you have a great accountant. If you are your accountant, you should probably be afraid of the IRS knocking. This happened to me. I had the IRS show up, 4 agents, armed, badges, didn't know who they were. But when I looked out the door, I saw this and I went, oh man, they're here for me. And this is after the meltdown. So I thought, I don't know what happened, but I'm in trouble. And so of course I did the natural thing. I went and hid in the closet. That's what you do. I hid in the closet for 2 hours. And the crazy part about it is after I came out of the closet, I went and found an envelope on the front door and I thought, I've been served. And it was from the IRS, but it wasn't for me. It was from the lady that lived in the house before me. So, we build up all these fears because we don't have information and we really don't know how to process it. But I do think we should be afraid of the IRS if you don't have information, because this is the number. This is how much of your money you're going to give away over your lifetime, mostly to the IRS. It's taxes. 70% of your wealth is going to be vaporized. You think about that. Some of you have heard the number, most of us. There's like this magical date of around May 1st or May something where we hear this, hey, guess what? You are working for you. Before this, you were working for the government and it was all taxed. Now it's all yours. That's actually a lie. It's not Memorial Day. It's Labor Day. It's like September 1st or September 4th. That's when you start working for you if you don't know the rules. Different number is 0. Zero is what you pay if you actually understand the rules and you have a great team. Many of you probably remember the debate / argument between Hillary Clinton and Donald Trump back in 2016 with the presidential election. And she got, just being Hillary, she said, Donald Trump doesn't pay taxes. That's why he doesn't really want to release his tax return. And Donald Trump said, that makes me smart. He actually said, that makes me smart. And it was almost comical because she was pandering to people that are paying a lot of taxes or people that don't make very much money, and they see these really rich people not paying taxes, trying to make him out to be a bad guy because he didn't pay taxes. That does make him smart. Why? Because he used the tax code to go build real estate, to do things the government needs us to do. You could do the same thing if you have better information. The reality is very rich people very rarely pay taxes. You look at the richest people, does Elon, does Jeff Bezos, do they pay taxes? Very unlikely, any. And it's because the tax laws are written for people to be creators and makers, to go do real estate, to create businesses, to create jobs. If you don't do any of that, you get taxed 70%. So this is a totally different game. I'm going to show you how the rich play the game. First off, if you're gonna invest different, if you're gonna think different, you have to start somewhere. So really, it's about thinking different, which leads to investing different. And investing different is about investing with different tools. It's not just picking stocks over real estate or real estate over stocks or gold or crypto or whatever. It's about having the right tools. And the tool that we're going to talk about is the EQRP. It's an enhanced qualified retirement plan. It's a unique thing. There's a lot of confusion out there because of Google. So Google has done some great things, but you remember when they started and they said our credo or creed or whatever is to do no evil. Has anybody noticed that no longer exists? Go find it. It doesn't exist. They got rid of it. Why? Because they're doing evil. It's obviously my opinion. Probably get deplatformed for that too. But
don't say it on Google or YouTube.
Don't say it on Google. Don't tweet it. Don't put it somewhere because Google will say, ooh, bad. And then all of a sudden you're like 10,000th in the list of SEO. Right. But here's the reason I say that. Because Google is putting out information based on algorithms. And so when you search for something, they give you an echo chamber. If you ask a question, Google will give you answers based on your question that really reinforces your bias. So if you ask a question, most of our questions tend to be, hey, I have a question and I want you to tell me the answer that makes me feel better about being right. So what does that mean? It means Google is giving people bad information based on people that post on blogs, people that don't know what they're talking about, and confusing the public. So the EQRP is a unique thing. It's what Bronson has. It's what people have when they actually want to have control. And what do I say? What do I mean by that? When you want to have actual control, when you want to have a level of energy focused on self-responsibility, when you're no longer a victim, you're not going to blame an advisor because you have a 401k. You're not going to have that option anymore. It shifts all of the power and control into your hands. And I'm going to show you why you're going to say, oh, I never want to talk about self-directed IRAs again. I'm going to share with you why you're going to say, gosh, EQRP, I would never look at a solo 401k again. Like there's a reason that this is a different thing. It's totally different. And you guys are going to get really clear on that over the next few minutes. We call it the Ferrari of 401ks, not just because Dum Dum bought one in his 20s, but because it's truly, it's a class of one. There's nothing that competes with it. Like people try to compete, but bottom line is you can't compete with the Ferrari. Like, what are you going to say? I know there's a movie called Ford versus Ferrari, but you're not going to compete with Ford Taurus and a Ferrari. Like, give me a break. They're totally different. And I'm going to show you why. Right now, there's about $40 trillion in retirement. A year ago, it was about 30 trillion, but we just keep doing this crazy thing called pumping money into a system, and people have more and more money. But the problem is most of it's in the stock market. So that's a problem. But most people don't realize it's totally a problem. Most of you haven't heard of what we're talking about. The EQRP is like, well, wait, where is this? I've never heard of this. My advisors haven't told me about this. Why? Why hasn't anybody told you about this? Why is Bronson telling you about this? Well, it's because Bronson's not a wolf. Bronson is not part of the Wall Street system, but the Wall Street system it's full of people that are there to feed on you, to take your fees, to basically control your money. They're there to get rich while you just get older and broker. And that's the system. So you have to be better and smarter than that. But this is why you haven't heard of it. Kiplinger's Wall Street Journal, doesn't matter what you're reading or watching. You're going to learn what the system wants you to learn because it has a vested interest in keeping you stuck in control of your money. So the EQRP, when you boil it down, what it is, it's a checkbook for your retirement money. It means that you have control. You have speed. if you want to invest in a deal, if anybody's paying attention to crypto right now, if you are slow, you could be literally missing out on 5-10% returns over a matter of a day or two, or sometimes minutes. If Elon tweets, it's 20% in 10 minutes. But the point is that if you don't have control of your money, if your money's stuck with a custodian or an advisor that takes a week to call you back, you're going to lose out. You're definitely going to lose out on deals. How many deals, Bronson, have people had where there's a deal that's available and their IRA custodian takes 3 or 4 weeks to get them money or whatever, and they lose the deal? Like, that happens. It happens all the time.
Yeah, actually, it's a very common thing. And again, this type of account, some of you, I think, are kind of new to this, but just the ability to have freedom over what you want to do with your money. Basically, you become that custodian, and you're able to basically put it where you want it. If you want to put it in real estate, if you want to buy physical gold or silver, you want to and have basically full freedom without some of those tax rules that apply, you can still keep it in a sheltered account. And so he's going to get a little more into it, but I just want to let you know, it's not just like another type of account. It gives you full freedom. If you want to, immediately people are wiring funds into deals, and our deals would fill up. The last deal we had filled up in 24 hours. It was about $8 million. And there were people that could not get in the deal because they had a self-directed IRA that was not a EQRP. So they weren't able to, it was literally the way he's describing it. You have to, this person goes to here and has to make sure it's okay. And it takes a week or two. And it was just not enough time. So time is a big issue as well, like he's saying.
Time is everything at this point. I mean, it's if you can't react there, it was crazy. And you can look at this. This is not me slandering Schwab, but if you look at their documents literally say, if you'd like to have us fund a deal out of your account, this is like self-directed, some of their stuff. We will respond within 4 to 5 weeks. And I looked at that and I thought it was a mistake. No, must be in days. No, it was 4 to 5 weeks. Respond. That doesn't mean they're going to give you your money in 4 to 5 weeks. It means they'll respond to your request for your own money. So you just have to understand that the system is set up to keep your money trapped, and this is a way to untrap it. The EQRP works whether you're by yourself, whether you have a W-2 job, whether you have 50 employees or 5 employees or 2 part-time. It doesn't really make any difference. It's the only thing that works in those environments. Nothing else works. And I'm going to show you the differences. We're going to get into some details. EQRPs, one of the nice things is you don't get hammered with transaction fees and management fees for what? Like, what is a custodian really doing? You build up a bunch of money and they keep charging you a percentage of your assets for what? Like, what value are they creating? And then you get a check and they charge you $25, or you do something and they charge you $100. It's like, to me, that just it's like a mosquito. And I grew up in Alaska. I mean, the mosquito is our state bird. So it's really annoying when they keep picking at you. None of that with an EQRP. You actually have lawsuit protection in places like California, which, some people on this particular webinar are located in California. You got to be careful because the rules are set up for victims. They're not set up like in Texas or in Florida where you're super protected. You got to make sure that your structures are protected from lawsuits. EQRP does that. Other things like IRAs and solo 401ks don't have the same protections. You have a built-in credit line. I'll get into that, which is very cool when you actually need money and the bank turns off your hose, your faucet. One of the neatest things about real estate, whether it's syndications or you're just buying a house, you can use debt and you're not going to get taxed. I'm going to show you how you're sitting on a ticking time bomb if you have an IRA, self-directed IRA, anything like that. And most people have no idea. Bronson alluded to it earlier, and it's almost like this thing that people think is not true until they get a tax bill and then they're stuck. I'm going to show you how to avoid that forever. Other options you have, including the real estate, and real estate could be anywhere. It could be in the US, it could be anywhere in the world. It could be land, apartments, it could be swampland, it could be mountains, like whatever you want. It's really wide open. The only thing you can't do is buy a vacation house or something you're going to use, but you could buy something like that you were going to rent out and then use down the road. So really anything you want, you can do. You can be the bank. You can do notes where you basically get paid interest. It's kind of cool to get paid interest versus paying interest. So you can do that with this. Buy physical gold. You cannot buy physical gold and silver and keep it yourself with an IRA. Totally banned, restricted. If you do it, you're disqualifying your IRA. Penalties can be the entire amount of the IRA. With an EQRP, you can take physical possession of gold and silver because you're the trustee. And then all the crypto, Bitcoin, Ethereum, any of that stuff is available. And again, you're going to control it. So you have the option of where it's held. Few things that you can't do. The IRS is funny about this. They say, here are the things you can't do. And it's a short list. Mostly it's about who you can't invest with. You can't invest your retirement account with kids and parents. You can't, like I said, with vacation property, unless you're going to have it down the road, you're generally not going to have anything that you're getting current benefit from. You can't be your own real estate agent and use your retirement account to buy something where you're getting a commission. That's current benefit, not allowed. And then no collectibles, no rugs, cars, wine, cars to flip. The wine is obvious because the IRS knows that you'd end up at 60 just really hungover and broke, so they don't let you invest in something like that.
That's a good reason. Good reason not to.
It makes sense. It makes sense.
Sure.
So the self-directed IRA is the most common thing. Why? Because it's a $10 trillion industry, at least, probably more like 12 to 15 now. That's where a lot of money is, a lot of marketing dollars. That's what we see advertised. That's what a lot of conferences have. They have a whole bunch of custodians because it's super lucrative and really, really good for them, not for the people that are using them. So I'm going to show you why really you're going to look at an IRA. It's going to be like kryptonite in a second. And we're going to compare it directly to the EQRP. So you can say, okay, this is why I would want an EQRP. And I would never want an IRA unless I was stuck with one. Full disclosure, I have an IRA and I have it because I inherited it. There's no option. Once you inherit an IRA, you can't change it into anything. So there are a couple of cases where you can't, like a Roth IRA, can't do anything with it. You're just stuck. But you might be able to dissolve it and maneuver money. And so we'll get into that in a little bit. Big differences between IRAs and EQRPs. The custodian makes everything slow. I don't care who it is. I don't care which company it is. It's just part of the system. It's full of friction. EQRP, there is no friction. It's fast because you're the trustee. As fast as you can wire or write a check, and you can do this right out of your bank account. And the wiring is set up. We set up a wiring system so that if you have a deal, you can wire that thing in the next 15 minutes. You have UBIT tax. UBIT tax is something we're going to get really specific about. If you invest in real estate and it has debt, you're going to get killed with UBIT tax with an IRA in almost every case. EQRPs, you can have unlimited debt, no UBIT. $6,000 a year into an IRA is what you can contribute. I mean, 20 years of contributions, 100 grand ish, is not going to get you rich. It's going to get you old. So in EQRP, you can actually put 58,000 per person per year. If it's you and a spouse, kids, I'm going to talk about kids, unbelievable amounts of money that you can put in. And if you say, well, I don't make that much, great. Let's figure out how to make you do something that makes you more money and then get that money into something where you're not going to pay taxes forever. Here's a deal that a friend of mine out in Texas did. And it's a good example of why you would want an EQRP and why you would say, oh my gosh, IRAs are toxic. The deal looks like this. It's a $50 million deal. It was a build from dirt up. It was a hospital. And there was about $10 million that was put into it. So the $10 million, $40 million was debt. So it's an 80% leverage deal. That's pretty aggressive, but I mean, it is what it is. Usually it's like 70. But in this case, the promoter, the sponsor had a lot of experience and was able to get 80% coverage for debt. That deal had $5 million of cash flow, sold for $85 million. So over the 5 years, there's $40 million in profit. Pretty much everybody's happy at this point. If you put in your money, except unless if you were an IRA, if you had an IRA, because as an IRA investor, that thing was 80% leveraged. 80% of the purchase and development was debt. So 80% of the profits, because of the IRA, are taxed. So the UBIT, the unrelated business income tax, is a $20,000+ tax, and nobody knew it was coming because really nobody knew. The people that did know didn't say anything. IRA custodians will not talk about this. And if they do talk about it, they pretend like it's just going to go away or it's not going to happen. That is BS. It is a lie.
So Damion, I want to just say something real quick. It is like the sneakiest thing in the world. So just so people get it, it's like you invested in this real estate in your retirement, and because debt was used to do it. So because you took a loan on the property, even though you're a passive investor, you can end up with this huge tax bill. So you made a bunch of money, but then you're paying 20K of it out to Uncle Sam just because it wasn't structured correctly. And that's what a lot of people don't understand. And that's why really one of the biggest powers of this account is the ability to avoid it.
Exactly right. People don't know, or if they do know, one of the things I like about you, Bronson, is that you're not just trying to raise money and put deals together and disregarding your investors' consequences. You're giving them all the information, and many people either don't know or they do know, but they don't want to tell people because they're scared that somebody will say, "Well, I have an IRA," and they won't invest. So instead, they just take the money, and then the person ends up with a tax bill. So kudos for what you're doing, and for everybody watching, you're in the right place with the right guy.
Well, it just, I mean, you look at it from a practical perspective, it just destroys your returns, right? Like your just returns go from like, oh, it was a pretty good return to like, oh, that was kind of like a really mediocre return. And it was totally unnecessary if you just taken a couple steps. So that's why I just think every single person that invests in real estate or is interested in it should listen to something like this because it can save you 20, 30,000 bucks. And those 20, $30,000 moves, some of you, it's way more than that because you invest way more. So, I mean, it's so valuable. So I'm so glad you guys are on this, listening and seeing this.
Yeah. So what is this? I mean, where did this come from? This is UBIT is unrelated business income tax. It's from unrelated debt financed income. So basically we're saying there was some financing going on. It's not debt that you signed on. It's just part of the deal. If you make returns and those returns benefit from debt, which they would if you have some type of leveraged property, then you have this tax. And it's almost all of the chunk you're talking about, that $80,000 we talked about a second ago, it has the 37%. It's a progressive tax. So like 0 to 12,000 is 10 or 12%. And then it goes to 37% like almost instantly. It's very fast. Like in our tax code, you have to make $400,000 or $500,000 to hit the top tax bracket. Here you hit 37% in a heartbeat. So just understand the bottom line is you're basically going to pay a third of your profits that are those debt leverage profits to UBIT. It's not fun. Totally optional though. Here's what it looks like. If everybody invested their IRAs, we're talking about the difference of potentially $11 million, where EQRP investors would have all their money and IRA investors have a massive haircut. This is brutal. And people say, well, why is this the case? Why is an EQRP going to have, why does it get to keep all its money? Well, it's because there was something different written into the code. The IRA investors are paying up to $29,000 each. EQRP investors are paying zero. It's because years ago, pensions and 401k administrators went and used their very smart lobbyists and cajoled the Congress to have an exemption. So the EQRP people could invest in real estate developments. The developers needed money. So there's tons of money in 401ks and pensions. And they said, we want this money. Well, there was a tax, the UBIT tax. And they said, well, we needed an exemption. Apparently the IRA custodians don't have very good lobbyists. I mean, that's my only conclusion. Again, it's the EQRP is exempt from UDFI. And it's just part of the code. People say why. And I'm like, I don't know. It's the IRS. Go ask the IRS why. Like they'll just, who knows where that goes. But it's a black and white type of rule. And it is what it is. Another couple came to me after an event a few years ago. And they said, we just heard you and we have a problem. And I said, okay. They told me the problem. They have this house that their IRA had purchased. They were flipping it, 50,000 a rehab. They bought it for 150. Almost all of it was debt. Very, very little was actual cash. Property was selling. And it was closing for $300,000. Pretty good. Gross profit, 100,000. Net profit, 58. The problem is it was an IRA. And so their accountant told them, hey, when you close on this, you're going to owe about $20,000. And I said, yeah, that's true. And they said, can we fix that? And I said, yeah. So we converted their asset to an EQRP, and that $58,000, they got to keep it tax-free. One of the problems people have is that they have this event. They don't know the tax is coming. They take the money, the $58,000, and they go invest it. And then they get a tax bill at the end of the year or in April. And they go, all my money's invested. And then you got to start paying interest and fees and penalties. So it's a pretty big problem, and people don't even know it's coming.
So, Damion, real quick, I just want to say, so our deals are typically 5 to 7 year hold, sometimes less, but we'll get people, I'm sure there are people on here that are invested through different sources in some sort of retirement account that you're saying they can convert it as long as it's before the property is sold, correct? So they can do it in year 4 and still avoid that tax, right?
That's right.
Yeah, it's huge.
Being exempt from something from a tax is, I mean, it's kind of like it's the golden goose. And what you just said, if somebody's already invested, what do? Well, here's the answer to your question. You're like 44 seconds ahead of schedule, but here's what it is. You're already invested in with your IRA in something. You just have to move the asset over to the EQRP before it's sold. This is the current rule. Some people that don't like my 30-second idea, they'll say, well, I'll just do it later. That's assuming that the IRS lets you. Right now, you can't move over Roth IRA. If you have a Roth IRA that's invested, you're stuck. Guess what they're going to be doing when they realize that there's billions of dollars in revenue that's being lost because people are rolling their stuff over? They very well may say, I mean, taxes are going up and they're looking for places to pull revenue. They could easily say, no more rollovers. So if you think, well, I'm probably not going to sell this property, or the syndicator is not going to sell it for the next 3 or 4 years, you may be making a huge, painful mistake. So it's better to say, I'm going to get this taken out of the crosshairs of the IRS now. All right, question, who can do it? Who's qualified? If you're a syndicator, if you're putting deals together, if you're self-employed, if you have an online business, an eBay store, if you manage property, if you have a job, if you're a doctor, a dentist, it doesn't make any difference. If you have employees, there's a lot of confusion out there on who can actually do retirement plans, who's qualified. Literally, it's not who can, it's who should. Because there are people that would go and get their control of their money and they'd say, awesome, I'm buying a Ferrari, like Dum Dum over here that bought a Ferrari. Like that's what they would do. So that type of person shouldn't do this. Doesn't mean they're not qualified. If you have a couple of employees, or you are an employee, you can absolutely have this. You can have 15 different retirement accounts. There's no limit on how many you can have. Really important to understand this. It's not about you not being able to. It's most people just shut their mind off and they don't realize that they can actually do this. So in 2020 or in 2019, there was a Secure Act. It was a thing in Congress that passed, and it changed the rules. It used to be that you could have a solo 401k, which is basically just a 401k for an individual. You could have one of those, and if you only have part-time employees, you were okay. And the rules were you had to have a business and no employees. Secure Act changed that. You can't have a solo 401k. You can't have a 401k for yourself if you have part-time employees or full-time. What that means is that a 10-hour a week person disqualifies you. If you have a solo 401k, if you have one of these things that used to be very cool, you can't have it anymore if you have a part-time 10-hour person. So how do you fix it? An EQRP is set up for that. It's set up for employees. So what you really have is you have something that's going to work for you as you grow versus something that's going to be keeping you small. The reality is, to grow anything, you need people, you need teams. Like Bronson's not going to go out and have 10,000 doors by himself. Like, give me a break. He's going to have people. There's going to be a team. That's what you do. As an individual, as you're growing, you're probably going to have an assistant or a bookkeeper or somebody. Eventually, it's just part of the financial freedom. There's a formula, and part of it is teams. So the Secure Act changed it, and it made it so that if you have the wrong retirement account, you're setting yourself up for a big problem. Either one, you have to get rid of it and you just pay a bunch of tax and penalty, or two, you have to convert it to an IRA, which is a problem because if you have real estate, you're now subjected to UBIT, or three, you convert it to an EQRP. Why would you not start with the thing you're going to end up with anyway? The other thing that was really cool about the Secure Act was that it allowed you to set up retroactive retirement accounts. So you can have an EQRP set up in 2021 for 2020. What does that mean? It means that if you made a bunch of money last year and you're going, oh, dang, I got too much income, you could set up a plan now. We could set it up and you can fund it now for last year. Used to be you had to set it up in that year or it was done. This is called retroactive tax planning, which seems a little weird, but there's a couple of things. There's net operating losses that recently have been able to be done where you could go back in time. This is the other Marty McFly move, and you get to go back. When you do that, if you knock your income down below the QBI, which is qualified business income level, if you knock it down below that level, then you may qualify for another 20% deduction. This is very cool. So you could take your income from 200,000 down to 115. This is another $20,000 in tax savings. So we saw 20,000 earlier because people said, oh, I got rid of the UBIT tax. Well, here you just knock yourself into a lower tax bracket and you have lower income. And like, that's good. I mean, it's funny because each of these things takes about 15 minutes. Way better than Geico. Like 15 minutes, 15%. Woo! This is way better. $20,000. Like, good luck, Geico. Little Geico. I don't think so. All right. Converting. Here's another thing. Many of you are going to be able to qualify as real estate professionals at some point, or a spouse can do that. You invest in syndications and you say, okay, I actually think that I can qualify, or my spouse can qualify. One of the things that you can do is if somebody in your pairing or you qualify as a real estate professional, there's a way to take your retirement money and get it out of your retirement account so you can live on it. All this formula here, basically the way that the end result of it is, let's say you have 300 grand in your retirement account. This is a way for you to be able to get that 300,000 producing cash flow and paying you today at any age. 25, 45, 65, doesn't matter. Do not have to be 60 to get access to your money. The rules are in place for you guys to be free and not having to work anytime you want if you have better information and better tools. Anything you want to say about real estate professional?
So I recently became a real estate professional. This is a great choice. If anyone wants to have a conversation about this, let's talk. I saved last year. I have a post I did about this, but I saved about $50,000 in taxes. Just shocking. But basically, from my regular income, I have a consulting deal that I do in the medical field as well, and I don't do it very much, but it pays really well. And basically, through my passive losses, which come through investing in syndicated multifamily, I was able to write off ordinary income. And you can only do it if you put the majority of your time into real estate and you track that, or your spouse does. So what will commonly happen is, another way to do it, as Damion mentioned, is you can have a spouse. One spouse makes a lot of money, the other one is a real estate professional. There's all these passive tax losses. You can apply that to other things as well. So if you want to talk about that, please reach out to me about that. Can you go over that just a real quick? The $300,000, the account, how that is converted to a Roth. I'm kind of tracking this. Can you just kind of walk through that?
So basically, let's assume that you have $300,000 in a pre-tax IRA or 401k. What this looks like is you take that money, it goes into an EQRP, so we roll it over, no taxes. Once it's there, we convert it to Roth. Now, when you convert it to Roth, normally that's a taxable income. So that $300,000 is going to be added to your income tax, gross income. Now that is Roth, you can pull it out, because any Roth money you put into any type of retirement account, you can always take it out, no tax, no penalty. When you convert money to Roth, it's now considered the same thing. It's basis. You can pull the $300,000 out. So you pull the $300,000 out and you find this $1 million building and you buy it. 300,000 is your down payment, or you join a syndication with your 300,000. Also the same effect. Once you do that, the bonus depreciation from cost segregation is going to give you enough offset to where that 300,000 in new income from the conversion is generally going to be offset by the cost segregation. So it's income up, income reduced, and they basically go to zero. So now your 300,000 is out of your retirement account. And I don't recommend you take all your money out, because I think Roth is a good place to keep some. I just wanted to give you some options here that people don't talk about. This is a way for you to get income today, not waiting until you're 60. If you're 35, 40, 45 years old, sometimes retirement accounts are like, all my money is trapped. Maybe not.
Yeah, the reason I wanted to say that real quick, there's a lot of people may not quite, or a few people may not understand exactly what it is. Damion has a team of people that can kind of walk through specific scenarios with you too. So don't feel intimidated because maybe you didn't understand the scenario. There's just a lot of options you can do with it.
I have a lot of whiteboards, and what we do a lot of when people are interested in using their retirement accounts or setting things up, we'll just map out what they've got and figuring out best solutions. Sometimes it's a matter of shutting down the retirement account. Sometimes it's a matter of leveraging it. It's one of the things that frustrates me about the financial world is that people that sell X tend to say X is for everybody and it's the only thing for everybody. And I fundamentally disagree. When I work with Tom Wheelwright, it's funny. He says, the reason I like Damion is because Damion doesn't think everybody should have his thing. He literally just tells you like it is. And we do, because why would I want to have you having something that you're not going to like or use? You're going to be mad at me. That's not good PR. So the idea is we're going to make sure that you have what you need, not what we want to sell. And so just understand that most people that are selling things just want you to buy their thing. They're not actually looking at you and saying, is this the right thing? So we will, and we'll map it out. What does a camera have to do with $12,000? Kids. And so there's a picture that if you go behind the lens, you'll see a picture of me when I was 6. And here's the point. Our tax laws changed of many ways. One of the ways they changed, tax brackets changed a couple of years ago. So the first $12,000 in income for every American is zero tax, including kids. So if you decide, hey, you know what, I want to reduce my income, and you have kids, you can pay your kids $12,200 a year, reducing your taxable income, increasing theirs. But guess what? That first $12,200 is tax-free. It's no payroll tax if you set it up right. Literally no tax. Reduces yours, which is the highest taxed money you have. It's at the top. So you reduce that. That's going to save you $3,000, $4,000 right there. Just that one thing per kid per year. Sometimes people say, well, how can I pay my kids? I mean, there's a million things your kids can do. If your kids are only 5 or 6, the picture of me behind here was when I was 5 or 6, and I was a model for JCPenney. Now they're bankrupt. So I'm not saying there's a correlation or a causation, but I'm just saying, anyways, the point is that you should really think about how you can pay your kids. because kids are expensive. And if you're going to pay them, you might as well get a tax deduction.
You were saying you were a model for JCPenney and now they're bankrupt.
I'm not saying I caused it. I'm just saying.
You made it. Okay.
Yeah.
Gotcha.
It wasn't me. I didn't do it.
It wasn't me. It's
no. The other part of this is, so regardless of anything, if you have kids and you're not paying them, you're literally giving away money. And if you think that that's a good idea, apparently you would hate your money if you thought that was a good idea. At the very minimum, pay your kids and make sure your accountant, your strategist structures you the right way so you're not paying payroll tax. If you pay them through your company, you're going to be paying payroll tax. But up to age 18, there's no payroll tax if you pay them correctly. And then once they have income, they could contribute that they could contribute that $12,000 right into a Roth EQRP. Why would you do that? Well, because that $12,200 can be pulled out at any time because it's considered basis. So you can put it in there and then grow it. I wish my parents would have known about this and said, you know what, we're gonna set this up and we're gonna pay you because you're already expensive and we're gonna keep some of that in there. I mean, can you imagine if everybody was doing this? This is so cool. By the way, one of the guys that's gotten a lot of headlines ran for president a while ago, Mitt Romney, has over $100 million in his retirement account. You think his kids have Roth accounts? Guaranteed. I mean, it's something that most people don't understand is the biggest tax loophole, tax shelter in our tax code. I really believe that. I mean, if between that and real estate, if you're paying taxes, you have bad advisors or you're lazy. And people are like, I'm not lazy, I pay taxes. There are a lot of strategies. And I'm saying that because I want to poke the bear. I want you all to say, hey, you know, there's another way. I can actually choose to not pay taxes. You can, it is a choice. So how do you get money into an EQRP? You say, well, two options: rollovers, anything that you have from previous 401ks, thrift savings plans, government employees, 457s, police, firefighters, doctors. Like there's all those old plans, orphan plans. You can roll them over, unlimited numbers. Only thing you can't roll over is a Roth IRA and an inherited IRA. And then contributions, if it's for 2020, it's $57,000 per year max if you're under age 50. And this year it's $58,000. It can be deferred or Roth. If you make too much money, the IRS says, oop, can't do a Roth IRA. You have to do all this fancy footwork and tap dance into a back door. Not necessary with an EQRP, totally up to you. It's also 10 times as much. So why would you want, I mean, like I said before, $6,000 a year for an IRA, you're never going to get anywhere. Like you need to get some serious fuel in there. It doesn't matter how much money you make. You can do Roth or deferred. You can go deferred and then convert to Roth when you have some offsets. This is like sitting there, just waiting for you. The credit line that I mentioned earlier is very cool. What does it have to do with toilet paper? So somebody's right now going, hey man, do you still have that toilet paper? Like, did you buy that toilet paper? Because I couldn't get toilet paper in March.
It's a new wealth. It's a new wealth.
I'm telling you, this is like gold. People go, hey man, where do you live? I know you got some toilet paper. And I said, okay, so here's the deal. In 2008, I was at Costco. Costco used to only take American Express. And I had a black card, which if you've never heard of an American Express black card, they were a celebrity card. It was for people that spent too damn much money and have problems. They should be in therapy or in like, Spenders Anonymous or something. I was at Costco buying a pallet of toilet paper, legitimately buying I don't know why. Like, why does Damion need a pallet of toilet paper? He's one guy. I didn't have 17 kids, but I was buying it until they said your card has been declined. And when they said that, I laughed and I said, it's a black card. I can buy anything that I want. And the guy said, you can't buy toilet paper. And I said, crap. He said, well, so I called American Express and they go, you've hit your limit. And I said, I don't have a limit. What are you talking about? They said, you do. It's $16,000. And I said, wait. They said, you've spent 16. That's your balance. And your limit is 16. They froze the account. Was I a bad guy? Were they freaked out about the toilet paper? They were shutting everybody down in my industry. I happened to be in real estate, 2007 and 8. There were a lot of losses that American Express started to have because people were going crazy and we were in a bubble. So they said, we're going to freeze everybody. If that happens to you because you're in the wrong group or in the wrong state and you're relying on credit cards, you're toast. So what do? You make sure you have access to other money. Well, one of the things you can do is if you have an EQRP, you have access to a $50,000 credit line. You want to buy toilet paper or a car or a vacation or put a down payment on your own house, write yourself a check. It takes you 5 minutes. If you're really slow, like if you've never written a check before, it'll take you 5 minutes to figure it out. And then you got $50,000. So really awesome option that nobody really talks about.
Hey, Damien, we're getting close to the top of the hour here. I'd love to be able to take some questions. I don't know how many, this is all great. I know there's going to be some very specific questions here.
Yep.
How many more slides do we have before I don't want to cut you short, but I know you got a lot of great stuff to say too. So
no problem. We're going to go through the rules in about 60 seconds.
Okay.
And then we'll get to the questions. So big picture, don't listen to cheap objects can be expensive. That just means here's the rule. Don't listen to stupid people. Listen to Bronson. Listen to people that know what they're doing, that eat their own cooking. Most people listen to the wrong people and take the wrong advice, and you end up on a merry-go-round. It's called life is Groundhog Day. Don't do that. Listen to people that are balder than you. Bronson and I both have the same barber, and it's called wisdom. So I just recommend looking for gray and bald, and you'll find
they say
yourself.
God made only so many perfect heads, and he covered the rest with hair. Or
also true. Or a hat, or an FU hat.
I'm just kidding.
One of the things I would suggest you guys all do is have rules for your life, for your investing, and do that because it'll protect you from you. I didn't have rules. I lost a lot of money. And then I realized my ego needed to have rules to keep it in check. Just do that. Get some help if you need. Borrow my rules if you want. And these are my top 3 rules. Don't invest with people that are victims. Be careful about how much you invest in a deal. And don't invest in places that require bulletproof vests. Ultimately, the big picture here is people are afraid they're going to run out of money. Millennials, boomers, there is an alternative to that, and it's called getting the right information. Share the information with people. Be a little bit of a superhero. If you want to do that, it's really simple. Easiest way to do it is just text the word EQRP to 72,000. It'll allow you to get the cliff notes of what we've been talking about. You can get a copy of my book. The alternative to that is a really bad tattoo. Don't do the tattoo. Get the book. Reach out. Let us help you. I mean, this is a team sport. And if you think it's a solo operation to invest, you're missing the power of the synergy of people. And so that is the end of this. And I am very happy to answer questions. And first off, thank you guys very much for your attention.
You want to live life with no regrets, right?
If you have that tattoo, your life sucks.
Yeah, that'd be tough. Damion, thanks so much for coming to share. We're going to open up the chat for a few minutes here. So if you have a question, go ahead and put it in the chat box. While we're doing that, I'm gonna do a poll here just to kind of get a little more information from you about what's your biggest investing challenge. So I'm just going to start this poll. And if you have a question, you can either put in a question or you can go into the poll of your biggest invalid challenge in regards to investing. So go ahead and answer that. I think the thing about this investment or the way of structuring this investment is it's just free money. It's money that's just sitting there that if you don't take advantage of, it's just a loss. And a lot of people say now is, well, where do I put my money? If I have a lot of retirement, where do I put it? If I put it in stocks are higher than they've ever been. The price earnings ratio are above the 2008, 2009 crash and the Great Depression crash of 1929. So there's a lot of risk there. There's a lot of risk a lot of places. And so really when it comes to real estate investing, it really is the best way to invest. So it looks like on this poll here, I don't know if are you guys able to see this? Are you able to see this poll, Damion?
Yeah.
If you guys can put something in the chat, you're able to see it. So basically people are saying investing through retirement funds. People are understanding how passive investing works and finding more deals. So we're going to create more. I'm going to do a monthly kind of event like this, start doing some panels with experienced syndicators, operators to go over some of these questions and also bringing high value stuff like this with Damion. So please go ahead and continue with that poll. We are going to take some questions here. Just before we do, I wanted to show you something on the website. So again, keep putting your questions in there. I'm going to share my screen here. Wanted to show you something here on, this is on my website. This is bronsonequity.com/resources. And it takes you to this page. And this is the EQRP book. I have the 2020 rules here, but if you click on this link right here, it takes you to this page right here, which basically you can schedule a call to talk with them. They also send you this free book. And I have the book right now. I have the 2019 rules, but I just ordered the new one. And basically it's a free book. You can go to this website, bronsonequity.com, under the resource tab, and it will take you to check out the book. So I wanted to share that with you. One other thing real quick is I wrote this special report. If you haven't downloaded, this is the best investment strategy during and after a pandemic. It's got a full color type of report. You can get that at bronsonequity.com. Just click the link. You can download it for free. It's basically got the compelling reasons why you should look at investing in multifamily syndication versus other sorts of things. So we're going to look at some questions here and get into it. So John says, love the EQRP. And I've got a shout out to Justin and David. A question from Glenn is solo 401k to Roth EQRP, good idea or not? Maybe Damion, you can take that.
So it's always funny to answer a question and try to have a universal yes or no. Most people should say it depends. In this case, I would say yes, period. And why do I say that? Because Roth is a way to make sure that you're going to zero tax. Get yourself to Roth, get your money there. You're going to have flexibility. A solo is a tool, and if it's pre-tax solo, you're literally getting set up for a lot of damage and carnage, and you're going to have to stay small. So the answer is yes, you want to have a Roth EQRP, period. And I say that not because Roth EQRP is always going to be the best thing. You just want to make sure it's part of your portfolio and your tools.
Yeah, for sure. Sorry, I had a little earpiece malfunction there. So
because your like brain exploded. Like,
yeah, exactly. Yeah, my brain just totally my whole just brain exploded from all this. But so thanks for that, Glenn. Yeah, again, it is something. The replay will be sent out. So this will be sent out to everybody. This is something you can share. So if there's people that you're like, hey, people, I want to share this with somebody. I will tell this to you if you are looking online. You can obviously Bigger Pockets is a way you can kind of look at this, but a lot of people don't know what it is. A lot of people, my background is financial as well. So I was an investment advisor. I did a lot of research on this. I couldn't find a lot on it, but how this is actually structured, I really did some vetting of this type of account. And basically it is an exemption in the tax code that allows you through a trust, which is really what this is to basically help you to have liability protection as well as be exempt from those taxes, which is really amazing. So that's kind of how it's structured. They can get into more of the specifics on that as well. So Paul is asking the link. I'm going to just type this in the chat box. It's bronsonequity.com, and then it's under the resource tab. And again, if you're watching this on the replay, you can just go to the website and check that out. Any other questions? Anybody else have any other questions or want Damion to tell some more jokes or show him some karate moves? Or
I have
you got a bobblehead of yourself behind you there?
I do have a bobblehead. It might be Bronson, but it's actually it
could be. It's probably the same mold. We just kind of
probably is the same mold. The question that has come up a lot that's important. People will say, well, why would I invest in real estate with a retirement account, period? And they say, I'm going to lose all those depreciation things. And that sounds like a really dumb idea. And that's true sometimes. Like if you're going to buy a property and you're going to hold it forever, then that could be a really good place to hold outside of a retirement account. Here's the problem. If you, like, let's say you invest in a syndication, when that syndication in 5 to 7 years sells, there's generally going to be a taxable event. It's called recapture and gains. And so unless you can predict the future and you know for sure that all the rules are going to be the same, and I guarantee you they're not. There are things that are sunsetting with recapture or with depreciation. So bottom line is you don't care what the rules are going to be in 5 to 7 years, because when the property sells, all of it goes back into your retirement account. There is no taxable event. So that's just something to think about, that real estate may or may not be good depending on the real estate in terms of where you hold it.
Yeah, that's true. That's true. The rules are changing, and that's why it's important to pay attention to what's happening. And with a team like, obviously, Bronson Equity, we're committed to helping you, but also Damien's got a whole staff full of people that when it comes to this, I mean, I've had a lot of questions come up, and they've been super helpful at anything that I've needed, which is awesome. And I'm a passive investor. Before I'm an active investor, I've been a passive investor for years, and this is just a great tool. So it looks like I'm going to see if there's any more questions. Okay, this is a question from Ezra. Which asset classes can be in an EQRP?
Whatever you can dream up. I mean, it's really cool, because when you think about traditional brain damage from Wall Street, they tell you about, hey, you can do mutual funds or bonds or cash. So they say asset classes are these things. And I go, what does that mean? Well, like international, domestic, big cap, blue cap. And I was like, cap yourself. Like, what are you talking about? This isn't asset classes. That's all paper. And so that really the EQRP says whatever you want. Here are the things you can't do. I mean, from physical gold to real estate, crypto, startups, tax liens, like there's a million things you can do. asset classes are wide open. It's kind of limitless. It's up to your imagination more than anything, which is pretty powerful. You're not being restricted unless you restrict yourself. Think about that.
Yeah, for me, I actually invested in a self-storage syndication through my QRP, and I bought physical gold. So I bought some physical gold through my EQRP, which is totally allowable. It is really amazing. Again, I'm still recovering. People say, why are you so angry and bitter at Wall Street? And why do you have this edge? And I'm like, because they're trying to cheat people, because everything is totally, but they just have so many unethical ways of just skimming things everywhere here and there. And it's really, the financial services industry is all about, it's a multi-billion-dollar industry, and it's all about buying stocks and bonds. But stocks can crash in 50% or more in 1 year, and that's not risky, And then I look at real estate; it's just like a steady up and to the right when you look at large multifamily or other sort of things. So we'll do more webinars about that as well. But it is pretty amazing. So thanks for that question, Ezra. Any other questions that we have?
Oh, by the way, just to add on to what you just said, just because I have to, the last couple of weeks, we saw all that fiasco with GameStop and everything. And we saw Robinhood. And here's one of the things that we are not. We are not an app. There are companies out there that will do everything trying to be an app, and they serve you. But what they do is they steal from you. And I can say that with conviction, because what did Robinhood do? It was free. Your stock trades are free or free. Everything is free. It's because you're the product. Have you heard of Facebook? If it's free, you're the product. Robinhood was being paid by Melvin Capital to front run all the stock trading. And so who won in that thing? Melvin and the guys at Ken Griffin and Citadel. I mean, it's because Wall Street sets itself up to win. And so every time you think something is free, or look, I have a snappy little app and this is cool, you're getting what you pay for. So make sure that you're investing with smart people and you pay a premium for the best advice. Do not be cheap, or it'll cost you a fortune.
Awesome, Damion. Well, I really appreciate it. We're going to go ahead and wrap up at this point. Again, this replay will be sent out probably tomorrow. So if you do have any questions, please feel free to reach out to me. You can email me, just bronson@bronsonequity.com. Damion, maybe you could put your info in the chat too if somebody wants to reach out. I know we've got, when people request a call, they can do that on that website. But I know some people may want to reach out to you personally. But again, I really believe that the best investment you can make is in your own education. So that's really what we're committed to. So if there's anything that would be helpful to you, that would be a resource for you, that's something that I really want to help create, because I just think that, just like Damion, so many people are in financial bondage and they're stuck, and they don't realize there's this whole other way of living and investing and working the way you want to do it, and having the freedom to do what you want with your money. So thanks again for taking the time. And Damion, thank you again for coming and joining us. It was really great. And for the FU tribe, which I think is a pretty great name and awesome. I got to get one of those hats. That's pretty fun. But really appreciate you being here, and I really appreciate your friendship. And so if anybody has any questions, feel free to reach out, and we'll look forward to seeing you guys next month. We will have a multifamily or investing webinar as well. Thanks, Damion.
Thank you very much, Bronson. Appreciate it. Appreciate everybody.
Thanks.